gold is finally taking a breather. That could lead to the correction that is our buying opportunity. In today's video, I will show you the correction potential of gold and where gold could go based on the history of this bull market. And I'm going to give you the probabilities that I think each of these correction levels has that we get there. And then we're going to talk gold miners. Where will they go if we get the correction in gold? And what are the levels that we need to pay attention to buy into the gold miners during this correction? Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Helmy. Here you see the gold price spot, and you can see, okay, we are finally starting to lose some steam. Interestingly enough, and very, very typical for any asset, we didn't even make it all the way up to this zone that a lot of the analysts had pointed out as the target zone, which was around 4,750-ish. And again, I said this in my conversations with the subscribers that I met at the Rules Symposium, and I probably don't say it often enough here on this channel. When you figure out these areas where the majority of the market expects an asset to go, almost never will the asset go exactly to this area. We'll either overshoot it or undercut it. Remember, silver, $50 an ounce. Everybody was saying silver is going to go to $50 an ounce. I remember vividly telling people at the Rules Symposium, I don't know where the low is, but I can guarantee you it's not going to be $50 because that's what everybody's saying. I think we're going to turn before, and we turned around 54. So, very typical behavior of the market to fake out the majority of the investors. Now, the question that everybody's asking, obviously, is how low can this correction go? Because I want to get in the market, I want to get in the mining stocks. Fair enough. First things first. I don't expect this to be a very steep correction in gold. The miners are a little different because they have the correlation to the equity markets. But gold itself, everybody wants to get in. More and more people are starting to understand that this is not a bear market rally. This is the beginning of the next rally in gold. So I don't expect much selling pressure. Where would it come from? And if that's the case, that limits our downside potential. The most likely scenario in bull markets is that we get something like this, a correction over time. And this is not even a correction, it's more a consolidation. But I'm going to call it a correction over time because there are two ways how an asset can correct: through price and through time. Now, if we go back to 2024, so the years 2025 and 2024, because, well, 2026, we had this crazy blow off top, and then we have been stuck in a bear market. So we go back to 2025 and 2024. Why do I not go further back than 2024? Well, because in 2024, beginning of March, we had a breakout about $2,000 an ounce, about new all-time highs, and that was the start of the bull market. I know there are a lot of people that like to point out to this area right here as the first leg of the rally. I do not. To me, this is part, as you can see here, all of this is one big consolidation. So this run up here is just a rally within a consolidation, right? It's the cup, it's the handle. This was the rally up for the handle. really this is what started the next bull market in gold. So we're only going to go back to 2024. So let's start with 2024. We're going to go through this quickly. As you can see, where is my cool drawing? Let's see where. Here we go. So we had a run up here. We had a consolidation here. We had a consolidation here. And as you can see, as I point these out, you see these are not steep corrections at all. These are basically consolidations over time, with one exception. That's this one right here, right? That was a real correction. And then we enter 2025. I mean, I guess you can put this one in there as well. So let's measure these out real quick. Top to low, around 6%. Around 6.5%. Oops, sorry about that. Here we go. Around 5%. This one was just a, what is it with me and these triangles? This was just classic consolidation over time. So 2%, we can basically forget that. Here we go. So we got 6, 6, 5. We got 3 here. Then we got the big one. Damn it. Here we go. It was super, it looked super scary, but it was only 9%. And this one again, around 5%. So really you can see we're talking about in 2024, where the market was not very euphoric for gold at all. We can see the consolidations mostly around 5%, 9% max. Now let's look at 2025. And this is where things get interesting, right? We have a small one here. Then we have a big consolidation over time here. And we have a big consolidation over time here, including the retest. Let's put this into one. And what do we measure out here? This was around 6.5%. Top to bottom in the sideways correction was around 10%. Also 10 to 11%, and then this little guy right here, 6%. So there you have it. And as you can see, most of the time, it is a consolidation over time. That is the interesting part. Yeah. So that is what we can assume in this bull market now, especially since the situation is now more bullish because of the situation in the bond market than it was in 2024 or 2025. So what we should expect from gold is a correction between 5% to 10%. And 10% being the max. Now, let's measure this out. Where does this get us? %5 from the top gets us pretty much 5 to 6%, depending how fast we go, exactly to buy zone number 2. Not too shabby what the sauerkraut guy is doing here. And the 10% correction, this is the interesting one, would get us pretty much into the old number 3. Oh, sorry, I shouldn't have put this away that fast. Into the old number 3 buy zone. So where the 50-day moving average is moving into our old therapy session at about 4,215, that area. Now, because of the improved fundamentals, because of the massive underinvestment of US institutional investors, as well as money managers, fund managers, you know the drill. I believe that a 10% correction in gold, highly unlikely. I believe we're going to stop earlier. I think we're going to would stop probably around 8% max drawdown. So where does 7 to 8, where would that get us? Oh, that would get us right into buy zone number 3. So you can see there's a system to the madness that we have, right? 1, 2, 3, if you're new to the channel, welcome. But what does 1, 2, 3 mean? It is the 3 buy zones, and then the bonus buy zone would be obviously the 50-day and around 4,215 therapy session are marked by the probability of the gold price going there. So 1, the 200-day moving average, retesting this, I give that like an 80 to 90% probability to be happening. That's completely normal. That's reasonable. That's not far away at all. I mean, top to bottom, it's like 3.5%. That's completely normal. From where we are right now in gold, that would be 1.5%. So absolutely reasonable that this will happen. If someone has no gold exposure and says, man, I need to get in, that would be the first level to get in, to make sure you get in the market, get a foot in the door. Number 2, which would be the retest of the broken downtrend, I think this one right now is 50-50. And it's 50-50 because it would include an undercut of the 200-day moving average. So we would need to have something happening in the market, be it a dollar strength, be it a price jump in oil, be it the Trump administration coming out with an unexpected announcement, that would lead to the market to freak out short term, to push gold below the 200-day moving average. There'll be a lot of stops there, and that will get triggered, and then we'd go to number 2. I don't think, I would say 50% probability is reasonable. And then buy zone number 3, that would be fine also if we hit it quickly. That to me is like 30% probability. And then if we hit the bonus, that means that we're going to have an overall correction wave in the market that pushes everything down, and an external factor like massive dollar strength that I don't see in the charts at all be playing out. So that is the situation with gold. Again, from a correction percentage, getting down to price zone number 2 is not the problem. That's completely normal. It is the sentiment question for us to get there. And if that's the case, we would have to doink off the downtrend, the red line you see here, and move back above the 200-day quickly. If that does not happen, right, if this is, and we start to linger around where the number 2 is, around 4,400, I would start to then reassess the situation and say, okay, we might actually go lower. I personally hope we do not hit the bonus level around 4,215 therapy session, because that would mean that we gonna make a new low, right? Right now we're making higher highs, higher lows, and if we hit number 2, completely reasonable within the structure would be a higher low. That's fine. Number 3, also fine, right? Would be a similar low or maybe a little higher. It depends what the candle's gonna look like, but that's all right. But clearly, as you can see, if we go down to the 50-day, then we would make a lower low. We don't want to see that. Now, We're not there yet, so we're going to stay on the positive side. You know, I'm a passport holder of Positivity Island and like it that way. Life is more fun. Let's start to look at the mining stocks, because that's where everybody gets interesting. And to start with the mining stocks, we have to look at this. So this whole rally started on August 3rd. So in August, gold went up around 16%. Wild. In about 3 weeks. Now, let's throw up the GDXJ. Why are we using the GDXJ? Well, because I'm more interested in the junior miners than the senior miners. The mining stocks, same time frame. Here we go. Went up around 43%. So that's 2.6 times as much as gold. And that's pretty much in line with history. The mining stocks are basically options on gold. If gold rallies, the mining stock's going to go up more. If gold goes down, and especially if the equity market goes down, the mining stocks go down a lot more, which we also saw in the first half of 2026. And the ratio is around 2 to 3 times. So the mining stock's going to go up somewhere around 2 to 3 times what the gold price is doing. Now, what does that mean for us as far as the correction potential? First, let's look at a chart of the GDXJ. And we clearly see that we have the potential here, hasn't played out yet, of an island reversal. That is a bearish topping formation signal, and we also have to find a very clear line that we need to pay attention to now, and that's this line. We close below 131.20. Then things start to get really dicey for the GDXJ. As you can see, we got a lot of gaps open. So what would be the first target zone that we would look at? That for me would be a retest of the 200 and also a gap fill right here, which is around 117, 118. So that means 10 to 11% downside potential of the GDXJ. What does that? That would be, to me, the equivalent of hitting target zone number 2 in the gold price. What would that mean? That was around 5%, as we saw earlier. So 10 to 11%, 2 times what the gold price does. Yeah, that checks out. So if we see gold correcting more and falling below the 200 especially, then 117 around plus minus, because the 200 day is moving up every day, that would be the price target. So 10 to 11% downside potential from the top. We're already a little lower, right? But you can calculate it out yourself for the GDXJ. If we go down further, because the equity market's going to have what I expect it to be a volatile time in September, October, which are usually the worst months of the year anyway when it comes to volatility, but definitely in midterm election years, then my second target zone would be around here, 109, 110. You can see we have the uptrend coming up. We have the 50-day moving up, so we will have a triple support right here. I do not expect us to fill these gaps down here, just because sentiment has changed for gold overall, and people want the gold stocks if gold can hold up. But very short term, if the market struggles, if we get volatility, if we get a correction, after a run-up of 42%, people are going to be like, I'm going to take some profits in the miners. I'm going to come back later. Completely reasonable. So those are the two levels that I'm watching at GDXJ. And then obviously, because I prefer to buy individual stocks, then I'll look at the charts of the individual stocks as well. And by the way, if you find this information helpful, if this helps you to get more clarity for the markets and what to do and what your strategy should be, hit the subscribe button. Real quick, today is literally a birthday. Not my birthday, it is this channel's birthday. It's our 2-year anniversary today. 2 years ago at this exact day, some crazy bratwurst guy came out there and is like, look at me, I'm here. I'm going to tell you what the market's going to do. And all the YouTube people were like, boo, tell us about the Marvel movies. And I was like, I don't know much about the Marvel movies, but I can tell you a little bit about the commodity Supercycle. And, we've gone on from there, and we are only a stone throw away from 20,000 subscribers. Wouldn't it be awesome to hit 20,000 subscribers exactly on the 2-year anniversary? If you want to do something good today, this would be it. Just hit the subscribe button. Or if you have a friend who hasn't subscribed, who's interested in the markets, tell him, hey, there's the Schnitzel guy. He's all right. And his predictions are pretty good. Most of the time, he gets something wrong because everybody gets something wrong. And I certainly do. You should subscribe to the channel. We'll help him out too. Or if you have a coworker that you hate and you say, you know what? You should subscribe to the Schnitzel guy so you lose all your money. You're not going to lose all your money with me. But you get the point. Help spread the love. Help spread the word. 20,000 subscribers on the 2-year anniversary. That would be something. Okay, so the X factor with the gold miners are the equity markets. We don't know what the equity markets are going to do. The Nvidia earnings were stellar, just as I had told you on this channel in the beginning of the week. That was never the issue. The issue is, how is the market perceiving them? So far, so good. We will have to wait and see how it digests all the information around it. But if the history of the equity markets any indication, the volatility is coming. And again, that means there could be short-term irrational behavior in the stock market and in the mining stocks. In gold, not so much. The fundamentals are just too bullish, and the developments that we have seen in the bond market, I mean, that put the fear of God in a lot of investors, and they're waking up to the gold story. So I don't expect a lot of selling pressure on gold. Maybe short-term profit taking in the paper gold market, again, and that could then lead for the gold price going down short-term. But either way, if it's a correction over time or if it's a moderate correction, as you've seen now that we always had in this bull market since 2024 of 5%, even up to 10%, that is completely normal and within the normal volatility of the gold price. That's nothing unusual. And that is still the major buying opportunity. GDXJ at the 200 at the gap fill. That is probably a really good buy zone. And maybe we get the 50-day with a quick undercut. That would be ideal. If I had it my way and we would draw it up, that would be the perfect scenario. Quick undercut between the 200 of the GDXJ. Everybody's panicking. The stops are getting triggered. Everybody's getting out. Oh my God, the gold, that was a fake rally. We need to get out of the mining stocks. We need to buy some AI stock that I can't even spell. We drop all the way down to the gap fill, to the 50-day moving average, to this area where also the uptrend is. That would be a severe correction, right, from where we are right now. That'd be around 17% to about 20%. Again, look at this, 70 to 20%. Gold price correction, max downside, around 10%, 2 to 1. There it is again, would check out. So we want to have some liquidity in our back pocket because, again, September, October, going to be volatile in the equity markets. But we definitely should put some money to work. How you're going to do it, that's up to you. I'm not your financial advisor. I'm the guy who's telling you, enjoy today because it's a beautiful Thursday, or as they say in Poland, Little Friday. That is it for today. We see us tomorrow. Have a great day. Bye-bye.